Welcome back to CMB Connect, the podcast for candid conversations with mortgage leaders. I'm Val Buresh, and I'll be your host today. I'm thrilled to welcome our distinguished guest to CMB Connect today. Joining us is a true expert in mortgage processing and underwriting, Yolanda Estrada. She's a certified mortgage banker with an impressive 20-year track record in this field. She currently holds the position of Vice President of Processing and Underwriting at Santander Bank. And I want to thank you so much for being here with us today, Yolanda. It's exciting to have someone with your level of expertise, especially in processing and underwriting on CMB Connect. So I'm looking forward to this conversation with you. Processing, underwriting is a critical part of mortgage banking.
Thank you. Thank you so much for having me here. Well, I'm excited to have this conversation with you and, ready to get this started.
Yeah, I'd like to start actually with your career journey.
Sure.
How did you decide on a career in mortgage banking?
I feel that I actually was exposed to the finance industry at an early age. I'm a first generation American, so I was often the small child who attended doctor appointments, school appointments with my parents to help translate and everything. My dad at some point decided to become self-employed. So I would go with him to banks and help him complete loan applications and everything. And once he got his business up and running, I was helping with the bookkeeping portion of it and, some of that part. So in a sense, I feel that, I was also always destined to be in this type of career. In college, I interned at a community bank, and that's where I really got firsthand experience with dealing with borrowers. So because I am Spanish speaking, I would oftentimes help the mortgage department translate and what have you. And just that feeling of having somebody, achieve the dream of home ownership. I mean, it's like no other. So that's what piqued my interest. And I started in the mortgage industry shortly after college. I had a small stint at another finance organization, but I realized that my true calling was going back to a community bank and to be in the mortgage department.
That's really impressive and very exciting to hear your personal journey and personal story, being bilingual and translating for your parents. Wow, that's quite an experience.
Yes, for sure. But I mean, it was fun. As crazy as it sounds, it was fun. And I saw the true impact, with that as well. My parents were first-time homeowners in their family and everything. And I didn't realize the impact of that whole process until later in life. And then, of course, being a part of the CMB journey, you realize the impact of generational wealth. And, I see the impact in my own personal life and how that their sacrifices have benefited me as well. And, I'm imparting that knowledge to my daughters who are middle school age now, learning about savings because that's not knowledge that I had early on. And even about loans, they have a small allowance. And so sometimes they'll ask for an advance and we'll talk about a loan and interest rates involved and everything. So I'm trying to engage them at an early age as well.
That's fantastic. And it's true. Home ownership is a big part of wealth generation in our country. When we look at the data, it's amazing that more than 60% of the household wealth, no matter what segments we are of the population, it consists of owning real estate, owning your home. So being part of that process is absolutely amazing. I'm also impressed not only from your personal journey, but also your professional journey. You rose through the ranks from AVP to VP at Santander Bank. Can you tell us about the challenges? What challenges did you meet in this journey and how did you overcome them, if there were any challenges?
Sure. I think throughout my career progression, there have been many challenges. And I mean, even early on when I started as a loan processor, it was establishing that collaborative relationship with the loan officer and really helping guide the borrower through that process or working through challenges. And then when I became processing supervisor, it was assisting the team in overcoming any challenges they had, collaborating with the underwriting department for that. And then when I started overseeing both and with the VP title, it was more understanding the risk involved in any decision that I made. Centier Bank is a Indiana-based community bank. We've been in business over 125 years. It's family owned. So it's also, having that responsibility of doing what's right for the family. So understanding what the um, bank's overall growth is going to be, what their budgeting is going to look like. Is my department, is my role doing its part with that? And in any decisions that I make as far as risk, especially in the most recent years where we've seen a lot of increase in repurchases, is a decision I made going to result in a repurchase? And if so, what is the impact going to be on our portfolio? And is that going to have any limitations on any future growth as well? So it's gaining that additional understanding and taking a step back further as each progression and learning that I did have the opportunity when I was processing supervisor to go through the School of Mortgage Banking. So that helped me learn the various areas of mortgages as well and just, get a good understanding of that. So it's just kind of like peeling back the layers and looking at everything from a higher level and gaining that understanding. I'm a person who's not afraid to ask why. So I do ask a lot of questions as I'm involved in some of the decision making. So that's helped me as well. And being open to learning too. There's so much to know about our industry. As you mentioned, I've been doing it for 20
Yes.
years, but I still feel that there's so much more to learn. And there's just constant change too. So it's keeping on top of that change as well.
Yep. Totally agree. Did you have a mentor as you were growing in your career, or did you do it all by yourself?
I am fortunate enough where I've had many mentors throughout my career, even early on in college, where I've had the opportunity where I've been guided through that. So I've relied on those people and I've established different relationships during my time too, starting early in mortgages. Many of the people I still keep in touch with, we started at the same level and we've progressed. So it's having the conversations about any changes we're going through. And even here at Centier, there are people that I can call on to assist me. So I'm fortunate enough where I can call on people depending on the situation. And so I do have that available to me. And here at Centier recently, we've also started a mentorship program internally as well, which I think is great. I've been on the flip end where I have provided mentorship to a couple associates, and I also do have the opportunity to look into gaining a mentor, at the senior level too, which is great as well.
That's wonderful. That's wonderful to hear. I think that's how we grow together, is with helping each other. And now you have access to the CMB Society with so many
Yes.
experts in it. So that's fantastic. But let's dig into your main domain expertise. Let's unpack processing and underwriting. Is there a difference between those two? Can you unpack those for us, and especially for the listeners who have never heard about those important processes in mortgage banking?
Sure. Both processing and underwriting can vary, amongst different organizations. So I'll speak to what we're doing here at Centier. So our loan processors are responsible for reviewing the initial IRLA, the loan application, as well as any initial documentation that is involved. So they'll go through the application to gain knowledge as far as the borrower, to kind of understand the borrower's story, so to speak, for that. And then they'll identify any potential challenges that may come along the way. They're also responsible for ordering services just such as flood work, title work, fraud reports that we use internally, and what have you. And what they're also doing is doing a quick analysis of the income, is the documentation that we have income related sufficient for the underwriter to make a credit decision. Regulatory changes as far as income related to the GSEs has changed recently since COVID. So it's ensuring that the documentation requirements do meet GSE requirements, and that, again, the underwriter can make that credit decision for that. So at that point, if they're ready to go, they'll go ahead and submit the loan file to the underwriter, who's looking at everything as a whole. They're looking at the credit report, they're looking at the income documentation for that, and analyzing the risk to the bank, reviewing various ratios, debt to income, loan to value, and does all of that meet the various program requirements and our investor requirements as well. If they can make that credit decision, at that point, they're issuing a conditional approval, which at that point, the file goes back to the processor, and the processor is really the one working with the borrower to gather that information. So they'll guide the borrower with the various requests and really simplify it for the borrower. We do this day to day where sometimes that gets lost or can be overwhelming for the borrower. So our processor really tries to simplify and really add why that documentation is needed, to get that engagement for the borrower. Once all that documentation is received, then it goes back to the underwriter, who issues a full approval of the file, and then we can move it on to closing. So both our underwriting and processing teams work hand in hand. Many of our underwriters were previous processors, so they understand the challenges when it comes to processing. So they really collaborate together to work through any challenges as well, which is nice.
Just in general, when I look at the industry as a whole, regardless of the type of institution, in 2023, based on the HMDA data, there were about 10.5 million applications taken, and about 15% of them were withdrawn by the applicant. So it's about 1.5 million applications were withdrawn by the applicants. In your experience, why would an applicant withdraw their applications? That's a lot of applications that could have been turned into loans. What do you think?
It definitely is. One thing I see as far as that is concerned is it really, the mortgage loan process can be so overwhelming for any first-time home buyer or somebody who has credit challenges, maybe a little bit ashamed or afraid to provide the full picture. Through our various due diligence, we may learn additional information, and they may feel that there really isn't a path forward. So it is really truly our responsibility to guide the borrower and make them understand why certain documentation is needed. And if there's challenges involved, it's important for us to share those expectations. I know regulatory wise, we can't discourage a borrower from applying, but we can share that, we've reviewed your loan application. These are some potential challenges that we may go through. However, we're here to guide you to get you to the finish line. So it's important to share those clear expectations and be honest. Borrowers appreciate honesty when it comes to that. And just knowing that they may have some uphill battles to overcome, but it's still doable when it comes to that portion of it. So that's one thing that, here at Centere, we engage the borrower early on to really have that conversation and understand the borrower and what they're trying to achieve. And if there are any items that may make things difficult, share that, we're here to help them, we're here to guide them, and just be honest and upfront when it comes to some of that information.
Yeah, you mentioned that this clear communication between loan officers and borrowers is critical, and that's one of your main strategies that you engage with or provide to the borrowers that come to your bank. But are there any other strategies or best practices that you have heard in the industry that can reduce withdrawals by the borrowers?
As you mentioned, clear communication is definitely helpful. As you know, we have many acronyms within the industry that we use: DTI, LTV, earnest money. So it's really educating the borrower up front and letting them know what we need and why it's needed. After somebody who may not have financed during 2020 or 2021 prior to may not understand some of the regulatory changes that have gone through the process. So it's really helping them understand why certain documentation is needed because maybe the last time they financed, that wasn't necessarily a requirement, but now it is because of those changes. So it's really breaking that down to, I guess, easier for the borrower to understand, to gain that engagement up front as well. Other best practices I've seen, because volume has been down and here at Centure as well, is that many of our loan officers have been going out to the community more and really providing first-time homebuyer courses and educating the borrower as far as the process up front, what is required and everything. And even, for home retention at a later point, many people know that things can change, but we oftentimes, our loan servicing department would get phone calls as far as why did my payment change when I have a fixed rate mortgage? So it's really sharing that information firsthand and stating, your monthly mortgage payments change, but then we have property and insurance that can change throughout the year as well. So it's educating as far as post-closing as well that we've done here at Centure. And I've seen other local lenders have that engagement with first-time home buyers as well.
Yeah, we also see a lot of applications that are closed for incompleteness by lenders. So on one hand, the borrower can withdraw the application, and then on the other hand, the lender can close the application for incompleteness. Those are less frequent, the closed by the lender applications, but what are the most frequently missing documentation that you have seen in the process? What is missing in the documents that borrowers don't have, that the lenders have to close the application for?
We've definitely seen an increase in self-employed borrowers where they do require more documentation versus your wage earner and everything. Sometimes when expectations aren't set up appropriately, they may not understand, or they may not have the understanding that after reviewing certain documentation, more documentation is required. So at that point, there's frustration on their end. From our perspective, we try to engage the borrower and keep that application open as long as possible, but we also do have regulatory requirements where we do have to issue that credit decision within a 30-day time frame. So we allow the borrower opportunity to gain that information, to provide that information to move forward. The other type of documentation is if somebody has anything derogatory, they may not feel that if they provide it, then they can't move forward, when sometimes it's just clarifying or providing additional information or a concern that we may have, which may entail some more documentation. But I think at that point, the borrower is just giving up and deciding that either they can't get the documentation within the required time frame or that there isn't a path forward. And sometimes that's where, we try to reach out to them multiple times to explain why it's needed in hopes of gaining, the borrower engagement back to move the file forward.
There's a lot of documents that need to be reviewed in processing and underwriting. What role can technology play in streamlining the application process and reducing the likelihood of these situations of closing an application for incompleteness, for example?
I know right now, currently, OCR is big. We haven't utilized that technology necessarily, within our organization because we are small and there is that additional expense to it. But I know that there is that technology where it reduces the stare and compare, so to speak. We've also looked into income calculators, the various income tools out there as well. For that. So to me, that's interesting, but at the same token, it kind of does take away the subjective portion of it as far as the underwriter review and keeps everything even on an even playing field, which I think is great. But at the same token, it does take away a little bit of that human element, and looking for those additional compensating factors may allow us to move that loan forward as well too. So those are things that we're always keeping our eye on as well. As far as additional technologies, because like everybody else, we have been slower. We're starting to dive into our data as well. I know there's various data analytics tools out there, and so it's just gaining that understanding and working on getting it at a granular level as well. Recently, my bank introduced a data analytics course, which I'm currently enrolled with too, just to gain that additional understanding within my organizations of everything that I have access to, and seeing if there's a need for something like training, or if there's a process change that we can make right now where things are a little bit slower and there wouldn't be as much disruptions to the teams versus when we're busier.
So the data analytics course is internal, your organization has created. Is that correct?
Yes, yes. So a couple courses in, it just they actually did their pilot course about a year or so ago and have been engaging more departments within the bank and everything. So it's really helping us gain an understanding of the tools we have available, whether it's Excel or Power
Yes.
BI, and utilizing what reporting we have on hand. Does it make sense to shift reporting to increase efficiency this way, or how can we utilize the data at hand to look at efficiencies within our own departments bank-wide?
That's wonderful. You said something
Mhm.
about the role of technology, that on one hand, we use technology to make things more efficient and more objective. But at the same time, mortgage, we also have the human element where the empathy or understanding, where we make judgments in the hope of helping someone achieve home ownership or refinance their home mortgage with a better loan. This is really an interesting topic. I think it is important to discuss it right now in our industry,
Mhm.
especially with the advancement of generative AI, artificial intelligence, because the promise there is that we are going to take out bias out of the system by using algorithms and just spitting a number and moving forward. But I really like what you said. And I was wondering if you can even elaborate a little bit more about that. Can we, as an industry, get to the point of a one button where we press the button and then we spit out a mortgage? Is this in our future, or do you see a different kind of future for our industry, let's say in the next 5 years?
I mean, to me, it's been crazy to think of the advancements we've had in the past 5 years. So looking 5 years ahead, I mean, we're going to continue to see the automation and everything. And I know a lot of tenured people who have been doing this for quite some time are scared of that automation. And as I stated, taking the human element. But I really think it helps us put our focus where it needs to be, with the consumer, with the borrower, and really guiding that borrower through the end. So I see the automation as allowing us more opportunity to have that personal touch through that process. So we reduce our time with the stare and compare, or we have tools that help us
Yes.
analyze things much quicker and faster. But at the same time, it helps us put the focus to the borrower and provide that guidance as well, and make it a more personal experience for that, versus trying to get everything done, at a quick pace, because we know our competitor can
Yeah.
keep up with that
Use the
pace, but it's
machines what
really
Mhm.
keeping that engagement.
Yes. And I was about to say that use the machines what they're good at, processing information, but then use the humans for evaluating that information and communicating with borrowers.
Yes, for sure.
What skills and knowledge do you think will be most important for mortgage professionals going forward?
Going forward, I would really say, I know I've heard a lot of people say this time and time again, the only constant we have in mortgages is change. So being adaptable to change, being willing to learn either a new technology, a new process. I know as I progress in my career, I'm getting older, so sometimes that change I may be a little bit more resistant to, but it's always wondering what the next step is or what the next advancement is. I would say anybody looking to get into processing or underwriting, if you like the analysis portion of it, if you have strong attention to detail, strong organizational skills, love working in a team environment, then this is a great opportunity for everyone. And really, our industry at a core is about helping people achieve that dream of home ownership. So that in itself is a very rewarding experience when it comes to it. So I would say those are the key things. When I started to look at it that way, I enjoy my job. I enjoy what to do. I don't really see it as a job. It's fun. I mean, don't get me wrong, there are challenges that do present themselves, but I enjoy what I do. I don't have a problem getting out of bed and, logging in and seeing what I can do for the day.
That's amazing. I think someone said that you have to find a job that you so much like that it doesn't feel like a job, feels like a play.
Right.
So that's
Correct.
great. Yeah. But with that, is it a good time to start a mortgage career in 2024?
I would say, yes, absolutely. Those of us who have been here a long time know that it's very cyclical. I know when I first started, there were a lot of stated income, stated asset loans, and then with that came additional regulations and everything. So there's always going to be something happening within our industry. So I don't see why somebody wouldn't jump in now. And at the same token, I think that our volume is at a pace where somebody can really gain a good understanding of their role, have the ability to be able to be trained in whatever capacity they take versus being thrown in, because I think a lot of us were kind of thrown in on the deep end, but somehow we've made it out here. So I think that that's a great opportunity as well.
Yeah. If you enjoy doing those things, if you enjoy analysis, helping people, any time would be good to jump into a career in mortgage banking. But outside of your professional life, what are you passionate about? I know you love your job, but do you have any hobbies or any secret talents?
I wish I had time outside. I do have 2 teenage daughters who keep me quite busy. They're involved in various sports. So my afternoons are involved with, practices or lessons. And then on the weekends, it's taking them to games and what have you. And just me, myself, being in this industry for 20 years, it seems like time has flown by. And, the time with my children has flown by too. So I'm taking advantage as much as I can with it. And also during my free time here at Centier Bank, we do get volunteer hours that we can utilize. So I do take advantage of those as well to give back to the local communities. So both things there are good resets, especially when I've had a crazy week. It's like, okay, this is why I do it. And this is a nice break from it too.
But there is no more important job or time spent than on the next generation. So this is amazing. And volunteering is also one way that we can help our communities. And with that, I just want to thank you once again for your time today, for setting up this time in order to share your insights, your best practices, to help us understand this world of mortgage processing, underwriting, to begin to imagine, for those listeners who are new to the industry, to imagine careers in those parts of the mortgage process. So again, thank you so much, Yolanda, for coming and sharing your expertise with us. Until next time.
Thank you so much for having me. It was an honor to be a guest on your show. Thank you.
That's all for today's episode of CMB Connect. Thanks for tuning in, and remember to subscribe for more conversations with industry leaders. Until next time, keep connecting, keep learning, and keep pushing the boundaries of innovation. This is your host, Val Boras, signing off.